We have Allcargo. It reported their Q1 earnings. Just to take you through the Q1 earnings, the revenue was seen higher by, came in higher about 11.7% on a year-on-year basis. The EBITDA margin came in at around 7.7%, a tad bit higher compared to last year. About 6.3% was what they reported last year. The PAT is higher by about 18.6%. And talk more on the earnings and the way forward for the company, we are joined by Prakash Tulsiani, who is the Executive Director and CEO of CFS and the shipping business of Allcargo Logistics. Good morning, Mr. Tulsiani. Thank you for joining us and talking to us about the earnings for Allcargos. Amid the sluggish growth, domestic economy and the weak global trade, how do you actually maneuver around the challenges in the Q1?
Allcargo Logistics is in four segments, and one of them is, of course, the EXIM segment. And that's where, yes, we have seen some trade restrictions being applied between the countries. However, we have fared well because we are into the LCL trade. We are into the MTO business, multimodal transport, where if the volumes shift from one country to another, we are present all over the world. That is 300 offices plus. So for us, the volume has been substituted instead of a particular country to another country. And that's how we have grown despite the market being sluggish between the two countries. And that being said, of course, the growth numbers are being projected by the world trade as being slow as going forward. Our numbers have been good. We have been growing in the segments where we are present. We have ensured that we have a good product mix or a segment mix of our customers. We have also ensured that we focus on a process excellence. We ensure that we deliver the product to our customers efficiently, and that's how we have also worked on taking cost out and ensuring that we deliver the returns that is needed by the shareholders.
Give us a sense of the traction in your MTO business, which is a play on the global trade and accounts for 86% of your revenue. So what's the near-term outlook for that segment?
Given what is happening in the world trade scenario, if it continues to be the way it is, we certainly will grow higher than the market. And that's what we have always maintained, that we'll grow higher than the market. And we have delivered those results consistently over a long period. And if you see, even in the preceding quarters, we have continued to outperform the world trade market. And we believe that this trend should continue.
Okay, how have things been in other segments which are domestic facing, like for example your container freight station, logistics, PES, contract logistics?
In Allcargo, while MTO business is a global business, we have CFS, P&D and also our new logistics park segment all focused on India. The CFS business also has grown in volume. In fact, on EBIT, we have grown very nicely and significantly. This is all the work which has been put into in the last few quarters, where we have looked at our processes and taking cost out, and even the product mix. When I say product mix, I mean over here the product offering to various customers that we have, and thereby going and capturing the market. So despite a slower economy in terms of overall as we hear, we feel that we have outperformed that and we should continue to do that. In our P&D segment, we have been talking about this for the last 4 quarters, that our utilization is going up. And indeed, that has shown results in the current quarter, where the utilization is 70% upwards. And we have, from the previous year, where we had a loss, in the current year, we have declared a profit of 8 crores. So this is the turnaround story that we have in front of us. And clearly, that has been also going out in the P&D segment to offer our services to various segments, rather than, what happened was there was a particular segment which went down in the sense of business, and we were hit. So we had to recoup that, and we have to reorganize ourselves and deliver what we have delivered now. In terms of a project business, we have a very good and a healthy order book, 130 crores plus. We have even forayed into other countries nearby, that is in the India subcontinent and also into Africa. So that has helped us also to produce good results in P&D segment. In our logistics park segment, there we are now in the phase of development. We had mentioned earlier also that all this should start, the income should start kicking in the second half of the current financial year, and we remain confident that we should see good results coming there.
Okay, just some closing comments from you. If we have to look forward for FY20, what is your target then in terms of growth and volumes and earnings that you have set for Allcargo for the next fiscal?
Typically, as we are in the marketplace, of course, that is, we are dependent on the world trade. We are dependent on the trade in India also, and the consumption in India. So looking at the world trade, which is having restrictions between few countries where the trade has been restricted right now, and we believe that these volumes will shift, and we should see these volumes, in our portfolio, because we are present in all the countries across the world. So if the volume shifts from one country to another country, we will participate there. We, as always, will grow higher than the market, that is market growth, and we continue to maintain that we are well organized in terms of our footprint. We have a great team which can go and deliver in this tough market situation, and we definitely believe that we will continue with this performance and only improve upon from here.
Okay, Mr. Tulsiani, thank you for joining in on ET Now and explaining to our viewers what went by in the first quarter and what we should watch out for in FY20.